Hi, people. We got to talk about Solana, and it's been doing amazing, especially in the DeFi realm and the DEX volume realm. I think Solana DEXs have overtaken Ethereum DEXs in terms of volume. Now, mostly that's because of the Jupiter airdrop and the Win airdrop as well. But remember, Ethereum is more than 5 times Solana's market cap. So that means there's a lot of area for growth for Solana in the bull run. I think it opens up pathways to 500,000, not 500,000, but $500 Solana and $1,000 Solana. 5 and 10x what it is right now. Because we know that Ethereum's probably going to around 10K or so, I believe. So, if Solana, goes to like 1K or something, that'll only be half of the Ethereum market cap in the bull run, and I do believe it can actually do that. Now, what would I actually buy in this, Solana craze? Would I buy Solana? Would I buy Jupiter? Would I buy Win? I think Solana's pumped a lot already, and yes, I do think it's still a good buy for the bull run, but I think upside is a little bit limited at this point. So I would look to other things. I wouldn't really look to Jupiter right now because they're dropping something like 40% of the supply. It's going to be one of the biggest airdrops ever. So I do expect a sell-off right after they actually drop the token. Wouldn't buy Win. It's a meme coin, and they're dropping a lot of the meme coin supply as well. I'm sure Win will have its pump and dumps, so I guess you could keep it. I know there's a bunch of shills on Twitter right now that say like you should keep the token because it's going to do great things. I'm like, it's a meme coin token. It'll do what most meme coins do. It might pump, but there's a good chance it'll dump a lot in price once the prices drop. Remember, the whole point of the ecosystem is to attract users, and meme coins do attract a lot of users, but many of those users are one-time users. They just get it, they sell, or they get it, they wait a while, and then they sell. There is going to be a percentage of those people that don't sell, though, and those are the people that you actually want to attract to your ecosystem, not the ones that just completely and utterly sell off. The ones that sell off, they're like vultures. But the ones that don't sell off, those are like, people who are participate in your ecosystem. I think Solana is going to attract some of those. So it will actually retain some of the volume. It won't retain all the volume or nearly all the volume, but it'll retain some of the volume after these airdrops are over. And I do think it'll boost the ecosystem quite a lot. Remember, even if they end up with like half of Ethereum's volume or a third of Ethereum's volume, it's still way more volume than they had before. And with that, TVL will actually go up and the price of the coin will go up. That's generally how it works. And some of the Ethereum supporters will probably convert over into Solana. Why? Because they're going to use Solana and they're going to realize, hey, it doesn't take 15 minutes per transaction. And dang, it doesn't cost $20 a swap. It costs like 2 cents a swap or part of a cent per swap. So some of people I think will be won over. Like if you're basically doing transactions for $20 a transaction that take like half an hour to do and you swap over to a new system, that only takes 2 seconds and basically like is free to swap, you're going to like that new system better. And I think it will convert some people. So the thing is, like, the coins on the Solana ecosystem I would buy are the Solana DEXs. They're way, in terms of like market cap, they're way, way less than Uniswap. Yeah, I am talking about things like Radium and even some of the smaller DEXs that might actually have more potential. The smaller the DEX you go, the more risk you take. But I do actually think Radium can actually start catching up to Uniswap. And realistically, you don't actually compare Jupiter to Uniswap because Jupiter you compare more like to 1inch. 1inch has never been that big on Solana, honestly. They just hyped up Jupiter a lot, so like that's why it's like so big right now. But Jupiter is not a DEX, it's a DEX aggregator. That means it combines all the DEX data and you can actually use it and use the DEXs via it. So it'd be pretty good, but I think Jupiter will eventually benefit things like Radium and other DEXs. And if Jupiter's volume is like really, really high, if they continue to incentivize it with more airdrops and stuff, guess what? Like the volume at the DEXs will keep growing, especially during the bull run. So I would buy Radium and other DEXs for Solana. I think that is the best strategy because with Radium being popular, with people actually using it, I do actually think like the potential for volume growth on the Solana DEXs is pretty darn huge. So, that's actually my opinion on it. I think it's a very, very good time to buy those specific coins. I don't expect Solana to like just fold and die in the bull run. I'm pro Solana now because their system actually works. They haven't gone down in about a year. And like the real test is, will they actually go down that many times during the bull run? If they don't, I think their system will actually work really well. I don't think you can actually like argue that Ethereum's that much more decentralized or anywhat decentralized, because the staking pool validators and also the clients are very, very much centralized at this point. And there's been a couple of problems with the smaller clients. Geth itself has not been hacked, but if it is, it would cause massive, massive problems. And the thing is, like, Lido just dominates Ethereum staking along with Coinbase and a couple of the others. And as soon as Coinbase wins their lawsuit, I think like the big exchange validators will actually even get bigger in terms of percentage. So you're not really going to argue the decentralization argument with Ethereum over Solana, so that doesn't really exist. VCs, yeah, sure, but we don't actually know how much the Ethereum Foundation has or Vitalik has or anything like that. Solana is very much dominated by VCs, but Ethereum honestly is probably too. Probably a little less because it's been out a lot longer, but that doesn't really concern me because there's a lot of coins that are dominated by VCs. And it's actually, so Solana's kind of like survived for a couple of years. So I'm actually more confident in it right now. So, like I actually feel pretty decent buying, if I were to buy into the ecosystem, into buying into some of the DEXs, because I do think that's where a lot of the money is. Obviously, take profits along the way. Make sure you actually have profit. But I think it's a very, very good strategy to buy like something like Radium or other DEXs that Jupiter is congregating into their like kind of 1-inch type of index. So that's what I have to say about Solana, but like, some more statistics. Basically, like the number of people using Solana is incredibly high right now. And that's because like the 7-day moving average of new addresses on Solana has hit its highest level ever since as new stablecoin WEN is airdropped to over 1 million wallets. The window for Solana users to claim WEN, which was launched by Solana's biggest decentralized exchange aggregator, Jupiter, closes tomorrow. So we'll see like what the drop off is after tomorrow. But my guess is like it's still going to be much higher than before. And I'm just seeing all the volume like, man, like Radium and others should be so much higher due to this. Their marketing has been great. Their DeFi expansion has been great. And these ecosystem stuff, that's what's going to provide value in the next bull run. To coins, not so much the industrial utility. So I actually think like, this bull run, Solana's going to do well. It's already been doing really well because it went from $8 to $90, but I think the ecosystem coins are seriously going to rock, and many of them are very, very far from their all-time highs. So I think it is a good time to go in and snipe now. Obviously, don't bet your entire portfolio on one network, but, like allocating some money to this ecosystem, especially to the DEXs, I actually do think is a pretty good idea. In sad news, the inverse Kramer ETF is actually shutting down after only being live for a couple of days because Kramer actually got something correct. And now the ETF is down 15%, negative 15% return. So basically, like there was an ETF that bet against trading tips from CNBC Mad Money host Jim Cramer. Turtle Capital Management launched in early March 2023, and it's going to be closed and liquidated with its last trading day on February 13th. The fund shorted stock buy tips recommended by Kramer, but only managed to attract 2.4 million and has seen a negative 15% return since launch. So Kramer actually has got more right than wrong this year. I know people say like Kramer always get it wrong, but like since the fund actually has a negative 15% return, he's actually been more right than wrong this year. Now he's not much more right than wrong, otherwise it'd be like negative 100%, but like it's negative 15%, so like a little bit more often right than wrong. So Kramer's not always wrong, he's just wrong some of the time. And of course, like people aren't going to just like trust a whimsical fund like this all the time. So they didn't really have too much. I thought this was kind of funny, but and I know there's like a meme that how wrong Kramer is, and he does get a lot of things wrong, but this fund just proves he doesn't always get it wrong. The meme, it's funny, but it may not be true. So like using the Kramer tips as inverse pointers may not work out all that well. So his love-hate relationship with crypto has seen Kramer previously claim that cryptocurrencies have no real value, but later admitted he was wrong and had made a lot of money. But on the cryptocurrency part, like I think they lost a lot of money over like right after the ETF, because he thought like was going to basically like go down like 2 days afterwards, and people bet against that. Had they just waited it out like another couple of days, I think they'd be okay because we're back up at $42,000 already, and I do think we're going to continue to go up. So yeah, the inverse Kramer thing, didn't really work out for investors for the first fund, and it's been around 10 months, so you have somewhat of a sample size. I bet if you did it over like the course of several years, it would most likely be like 0% return, which is obviously not a good return. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.